Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into plain English. And sometimes, just sometimes, we find out a company is quietly winding down a big fundraising effort, almost like a magician taking their hat off after a trick. Today we are diving into a recent filing from Catheter Precision Incorporated. And it's not about exciting new product launches or groundbreaking sales reports. Instead, it's a subtle but significant announcement about their fundraising strategy. So what exactly is going on here? This is a Form 8K filing, which is like a company's way of telling the Securities and Exchange Commission, or SEC, that something important has happened that investors should know about right away. Think of it as a public announcement of a major event. In this particular filing, Catheter Precision Incorporated, or CPI as we'll call them, is talking about their at-market offering agreement. Now, to break that down simply, an at-the-market offering, often called an ATM program, is a way for a company to sell its stock, its shares in small amounts over time, directly to the public. It's like having an open tap for selling stock instead of a big one. Time sale. This agreement was originally made back in May of 2025. The company they had this agreement with was Ladenburg Thalmann and Company Incorporated Inc., a financial firm that helps companies manage these types of stock sales. This program allowed CPI to sell its common stock, which is just the regular kind of stock you'd buy for ownership in a company, up to a total value of about $4.3 million. But here is the main news. On the 17th of November 2025, CPI sent out a notice they are terminating this ATM agreement. This termination will officially take effect on the 24th of November 2025. That means after this date, they will no longer be able to sell their stock through this specific program with Ladenburg Thalmann. Now, why is this interesting? It's interesting because it signals a shift in their strategy. Companies use ATM programs to raise capital, meaning they bring in money to fund operations, research, or expansion. CPI had the ability to raise up to $4.3 million through this route, and they actually used it quite a bit before they decided to end it. CPI had already sold shares worth about $4.0 million under this ATM program. That's a huge chunk of the total amount they were allowed to sell. They were really close to maxing out their ability to raise money this way. The good news for CPI is that they are not being penalized for ending this agreement. Sometimes if you break a contract early, there are fees or penalties. That does not seem to be the case here, which is a small positive detail for them. So what does this all mean? It suggests that CPI has either raised the capital they needed through this program, or they are looking for other ways to fund their operations or growth. It could mean they have secured other forms of investment, or perhaps they feel they have enough cash on hand for now. It's not necessarily a bad sign, but it does mark the end of an era for their stock selling strategy. It's like closing one door and planning to open another. Or perhaps deciding they have enough supplies and don't need to go to the all-you-can-eat buffet anymore. For investors, it's a signal to pay attention to where the company plans to get its future funding. Now, looking at this filing from a broader perspective, when a company decides to end a major fundraising tool like an ATM program, especially after using it so extensively, it often means they are either quite satisfied with the capital raised or they have identified new avenues for funding. It is common for companies to adjust their financial strategies as they evolve. CPI has been active in trying to secure capital, and this move is a clear indicator of that ongoing financial management. It's not unusual for companies to tap into these programs to bridge funding gaps or to support specific projects. The fact that they've raised so much money through this particular agreement and are now ending it suggests they've achieved a significant portion of their fundraising goal through this channel, or perhaps they are seeking a larger, more strategic investment round. We see companies often use these ATM programs as a flexible way to raise money without undergoing the full process of a public offering or a private placement. It allows them to sell shares gradually without significantly impacting the stock price, provided the market is receptive. CPI's extensive use of this program, raising close to $4 million, shows they were actively leveraging this tool to bolster their finances. The termination itself without penalties implies a smooth conclusion to this arrangement. It is important to watch what CPI announces next regarding their financial strategy and how they intend to fund their future operations and growth initiatives. Are they looking for venture capital, a strategic partnership, or are they planning to fund operations from their existing cash flow? These are the questions that will likely shape their future trajectory. Alright, that is our quick decode of Catheter Precision Incorporated's latest filing. What is your take on this move? Do you think it is a sign of strength or something else? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching, and we'll see you in the next decode.